Hello and welcome to this Friday's morning market briefing. We've got a lot to talk about, but firstly, oil falls to lowest level since July ahead of OPEC Plus meeting, as well as that Wall Street megadonors do warm to Nikki Haley as their anti-Donald Trump Republican. We've got lots to talk about on the charts, also with lots happening on the economic calendar. We'll come to that near the end, so make sure you stay around to see that. Before we get straight into it, make sure to subscribe. But yes, the first article to talk about is on the topic of oil, with oil prices slumping to their lowest levels since early July on Thursday. Now, this comes as the OPEC Plus group does meet in 10 days in Vienna. Now, this is a topic that we've been talking about a lot recently, the topic of oil, with, kind of different price predictions. Sorry, I'll move you about there. Different price predictions kind of coming out about where oil could go. Now, we did have, really kind of high price, expectations for oil, coming out of summer, as Russia and Saudi Arabia were pushing for that $100 a barrel oil price by extending their cuts in production. And when the war in Israel then did begin, we were then only expecting a continuation of that, considering, the geopolitical risks that were now associated around oil, with, of course, Saudi Arabia being a major producer of oil within the world, and obviously any supply cuts with, geopolitics playing into it in the kind of Arab region. We kind of expected that to heavily affect price, and we did even have certain geopolitical expectations on prices to reach $150 a barrel of oil. But despite that, we've actually started to see price sell off, and we've kind of seen more of that bearish action. Well, why has that been? Well, the kind of escalations within Israel didn't amount to too much in relation to oil markets. We haven't seen that regional escalation yet, and the longer that we wait, the less likely we really are to see that escalation. As well as that, we also did hear about, different and new kind of weather predictions going into this year's winter, which was now expected to be a warm winter. What does that mean for the Northern Hemisphere? Well, that means that less homes are going to have to be heating their homes as much. And as a result, there's less demand for oil. And, with kind of waning, growth for many nations, we're also looking at that as a possible strain on, the demand for oil, as, much of oil, is purchased, because, people have the money to maybe, drive a more expensive car, or have the money to drive more, or a business is able to expand its factories in times of economic growth. But if we are seeing that kind of economic decline, or expecting some of that, then we're less likely to see that strong kind of oil demand. And so I guess it's all these factors which have really been playing into, and what we've been talking about in relation to the price of oil. And this drop that we are talking about that took place yesterday will put pressure on the group to consider extending production cuts, because as I just mentioned, Saudi Arabia and Russia did make those cuts to production to push for that $100 a barrel oil price in July. Now, Brent crude was down 5.2% yesterday, which was one of the biggest declines this year, so a significant fall in price. Now, this brought prices under $77 a barrel and below the $80 a barrel level, which governments' budgets start to strain for Saudi Arabia and Russia. And we know that these are the two nations which were already trying to put in those cuts to production to push price higher. And, these are two very oil-rich nations which now are going to be put in a difficult situation with price under that $80 a barrel mark, which, if you think back to, some of the videos that we made around a week ago, I was analysing the oil charts and I was talking about that $80 a barrel mark, which we saw price actually respond to with, great kind of volatility. And that is because that $80 a barrel mark is so significant. And, that will now be putting strain on those governments, with the OPEC Plus group meeting on, November the 26th to consider how to respond to weakening oil prices and concerns of weakening growth, which may hold back demands. That's kind of on the demand front and growth front that we were talking about at the start of this video. And prices of oil had started to rise in summer following Saudi Arabia and Russia's kind of making cuts and additional cuts to exports, with Saudi Arabia extending cuts to production to all the way up until July of 2024. So, these kind of cuts in production have, previously, as we've noted, had effects on oil's price, but, they're seemingly not having the intended kind of effect on price that those nations wanted. And so it'll be interesting to see how now the oil markets will play out because of that, with the International Energy Agency saying, however, that the oil market should return to surplus in early 2024 despite the production cuts, which obviously will bring prices lower, with production outside of the OPEC Plus nations seemingly growing, with the US, Ghana and Brazil all boosting output, with Brazil set to now be the world's fourth largest producer of oil in 2029. So it's kind of this threat now on the OPEC Plus nations as they go into this meeting to kind of try and figure out a solution to keeping prices high, which are now being threatened by these growing nations within the market. So this is why it's so important to keep your eyes on, as this meeting will have such a great effect on the oil market, of course, and we're seeing such volatility in the oil market currently, added to by, of course, the geopolitical issues at the moment, with oil inventories in the US also growing by 3.6 million barrels last week, reaching a total of 421.9 million. So keep your eyes on this topic. We'll touch on oil on the charts at the end, so make sure you stay around to see that. But the next article to talk about is Nikki Haley. Now, Nikki Haley's strong performances in the Republican presidential debates have won over several of the party's big donors and intrigued other Wall Street figures this week. And now this is a topic that we've kind of covered quite a bit, but mainly on the topic of Donald Trump versus Biden. Now, Donald Trump recently has slid ahead of Biden actually in the polls for the critical states, which will be most important in the election in the 2024 presidential election. And if that is the case, then we weren't too interested in looking at other contenders, I guess, to the Republican presidential candidacy. But it does seem that Nikki Haley is kind of the one that's pushing out of the water here. Now, any rhetoric that we have covered in relation to the Republican primaries, has mainly been around the kind of wonder kid of Vivek Ramaswamy. Now, he kind of more mimicked the rhetoric of Donald Trump, but Nikki Haley has actually been one of those more against the kind of rhetoric of Trump, more of a moderate within the Republican Party, one with more an establishment experience and an establishment backing. And this is really what we're seeing now. And this comes as she swung through New York looking for money backers against Trump, and meeting with financiers such as BlackRock chief and former Goldman president, with the billionaire investor Stanley Druckenmiller, which is traditionally a big Republican donor, announcing his support on Monday, as well as a New York-based donor, Eric Levin, also did say he would host a fundraiser for Haley in early December, with big donors already having praised Haley on her foreign policy nuance, as well as her electability and her moderate stance on abortion, which is making her far more electable. And this is mainly the rhetoric that we've been hearing around Nikki Haley, is the fact that she is more electable. she is more of a moderate. She is more likely to be able to work with the other side. She's more of a moderate on Ukraine. She's more of a moderate on abortion. She's more of a moderate on the economy. And all these kind of sort of things. Actually, I'm not too sure about the economy one, but, her being a moderate on these sort of issues where she's most likely going to find, common ground with the Democrat moderates does make her likely, a more actual successful establishment figure. And, the only other kind of figures that we've been looking at that are pro-establishment within the Republican Party somewhat, has been like, maybe Mike Pence. And he was on, the kind of Donald Trump campaign. So it's like we really didn't have too wide of an options here that were well known within the Republican Party to contend for the leadership. But here we have Nikki Haley that's really pushing for that, and that's why she's now able to gain the kind of investment from these billionaires, from these kind of establishment figures within finance. So this will be really interesting to see how it will play out, with Levine telling the Financial Times that Haley had a muscular foreign policy, a positive view on America, and a rational position on abortion. And this muscular foreign policy opinion kind of that he makes about Nikki Haley is another key important kind of policy of Nikki Haley, is the fact that because she's the former US ambassador to the UN, she has that serious kind of foreign policy backing. We know she can work with international partners. We know that she has the knowledge to deal with these key conflicts which are taking place at the moment within Israel and Ukraine, and she's made clear positions on those issues, whereas we haven't really heard those same kind of clarifications on foreign policy from the more right-wing populist leaders, although they have been critiquing supply of weapons to Ukraine, for example. We haven't really heard a clear kind of definition to what they think of the Ukraine issue, what they think of Ukraine, what they think of Russia, whereas Nikki Haley has made that clear opinion, which is making her more attractive to those financial elites, with a series of polls across Arizona, Georgia, Wisconsin, Michigan, Nevada, and Pennsylvania in October showing Haley beat Biden in the 6 critical states which will be at play in the next year's presidential elections, which is the real key thing to note here. If Nikki Haley is leading in those polls, then the establishment will back her. She is the most likely to win in that case. So this is why it's so important to keep note of, with Haley having a higher average performance for registered voters than both Biden, DeSantis, so Ron DeSantis, and Donald Trump. So, the two other biggest figures within the Republican Party, Nikki Haley does seem to lead over. With pro-Haley group, with pro-Haley kind of groups now also outspending pro-DeSantis groups on advertisements, with Haley's campaign launching a $10 million ad campaign in Iowa and New Hampshire. And the reason those two states are so critical is they are at the start of the 2024 Republican primary race and usually act as the momentum needed for candidates to go on to win the primary. So it's so important to listen out for them, which is why we're covering this. So, we want to know kind of who's the favourite going in, who might contend, so that we're not too surprised by the reaction, which will definitely affect the markets greatly. So keep your eyes on this, of course. Next to talk about, though, of course, is the charts, with quite a bit happening at the moment. With yesterday, I was seeing US indices really consolidate. Now, US indices have kind of for some time now, since the start of November, been pushing quite in a bullish fashion to the upside. But obviously they did have this period over here, of kind of consolidation, that accumulation, as they did interact with, this significant trend line that we've highlighted before. Now, after the US indices, in particular here, the Dow Jones did break above that level on the trend line and that strong area of liquidity, we did see price push once again to the upside, extending past that Fibonacci extension that we do have highlighted there, and seemingly tapping that 35,000 mark on Wednesday. Pardon me, but it does seem that US indices do not have that momentum needed to continue that progress further at the moment, and that's why we've kind of seen that slight sell-off and consolidation on the charts as we've highlighted here. And this quite possibly could form another kind of period of consolidation, so it's important to keep your eyes on. Price is kind of around these sort of areas now, where we do have these prior highs, and so price could very well be reacting to that right now, because it does sit around the 35,000 mark. So keep your eyes on this. Next to talk about though is the dollar, which has bounced once again off this area of support and liquidity. Now, dollar obviously made that significant push to the downside following the inflation news which did come out from the US, which presented a more likely dovish position from the Fed, as we did see inflation come in below expectations. As a result, making it more likely that the Fed will lower rates sooner. As a result, dollar fell, and it did kind of make this base around the 104 level, where we had highlighted before, significant area of liquidity. Now, price has seemingly, come up and now rebounded off that kind of area of liquidity, bounced off that area once again. We did highlight, this 50% Fibonacci mark as an area which, the dollar could retrace to, as we were starting to see the dollar gain some bullish momentum. However, we haven't seen price reach there just yet, but considering that we've now bounced off liquidity once again, we could be making our way there now. So keep your eyes on the dollar, and the same is to be said for Euro USD, but on the opposite side, we'd obviously highlighted the 50% Fibonacci area on that level, as we were expecting somewhat of a retracement following the highly volatile bullish move on Euro USD responding to that US inflation data. And now we are looking to see, whether Euro will take a fall to that level. But obviously following, the dollar as well, we did see kind of Euro USD retest this, this kind of area, the highs made. Sorry, I'm just adjusting the camera. We did see Euro USD once again bounce off that upside area of resistance and liquidity, and so we're now waiting to see how price will respond and move. Next to talk about though is pound yen, which now has made that retracement down to that 38.2% Fibonacci area, which we have highlighted, which we did highlight, in yesterday's morning market briefing. So it'd be interesting to see how price will now react to that area. Obviously, we do have this area of liquidity as highlighted sitting in around there, but it's quite a wide area of liquidity, so we're not kind of able to pinpoint whether that will be around the 50% or 38.2% Fibonacci area to see, price react. So keep your eyes on pound yen as we do come into contact with this 38.2% Fibonacci area. This will be key to see whether, the pound can continue a move to the upside, as pound's been in a very interesting situation recently, so keep your eyes on this. Next to talk about though is USD JPY, which has been highly volatile in recent weeks, and we're seeing a continuation of that. So price obviously on Wednesday did bounce off this area of liquidity, and then in yesterday's briefing we talked about how price was starting to consolidate after that bullish push, and it does seem that we've sold off from that area, and we're kind of within this kind of sort of upward trend. So keep your eyes on this range is very interesting to kind of watch over. Bitcoin on the other hand has also been very volatile, with the night of Wednesday allowing Bitcoin to spike up to levels, these prior highs up here of 37 of the $38,000 mark. And we did highlight when price was nearing that level that this would be a significant area of liquidity and resistance, so keep your eyes on that. And now we have seen that sell off, which is why we did draw out in the first place this Fibonacci retracement tool. And it does seem that price is now reacting to that 6180 Fibonacci area, so keep your eyes on that. Next to talk about though is gold, which although was experiencing that sell off on Wednesday going into Thursday. Yesterday we have seen that bullish momentum once again return to gold, which kind of started following the retracement ending, where on gold price returned to the price of nearly 1930, and price pushed down to that that level where there was a strong area of liquidity and a Fibonacci level, and price responded quite reactively from that area, in line with the US inflation news and also geopolitical developments. Price has taken that move to the upside, but it did come into contact with a 6180 and liquidity zone that we had highlighted, but that was just a short-term retracement, it does seem, and price is now making that continuation to the upside. So keep your eyes on gold, as we do have the potential to move quite high with this. Obviously we're kind of tapping that 78.60 level now, so keep your eyes on this. Quickly to cover though is oil, of course. So this is just showing that kind of drop in price. So price seemingly has reacted to the 50% Fibonacci mark, and dropping now below the $80 a mark, which obviously price reacted to, where we formed this kind of liquidity zone as highlighted here. But now we do have the chance to kind of retrace back to that area before continuing down. So keep your eyes on oil, as it's in a very, very interesting situation. As you can see there, the 38.20 fib does line up perfectly there. So keep your eyes on this level for sure. That's all to talk about on the chart. So lastly to talk about, of course, is the economic calendar, where we'll cover the data very, very fast. Not too much data coming out today, but we do have the UK's retail sales data coming out, along with the Swiss industrial production figures coming. As well as that, we do have the ECB's President Lagarde's speech taking place. So listen out for that to hear more on the ECB's monetary policy. As well as that, we will have the Eurozone inflation rate. That's the very key and important bit of data that's coming out today. That's the one you want to be listening out for. That'll be highly that'll be affecting the dollar, euro, USD as well, of course, and gold as well. So keep your eyes on this data release and listen out for that. But apart from that, we do have Spanish balance of trade figures coming out, along with consumer confidence, Spanish consumer confidence. As well as that, we do have US building permits being released, along with numerous Fed officials speaking today. So that's all to talk about in the charts. We've covered it a lot on the articles as well, and we've covered the data, of course, coming out today on the economic calendar. But that's all to talk about from us at Wildwood Capital. That's all we've got to provide, but I hope you have a great trading day and enjoy this weekend as we obviously go into it. So have a great one. See you later. Bye.